So, today I will discuss the topic investment criteria. Actually, there's some confusion between investment criteria and determinants of investment. In case of determinants of investment, you have studied inflation rate is one of the important factor which determines investment, return, risk, liquidity, social security, etc. You have studied in case of elements of investment and determinants of investment. How investment criteria is different from determinants. Determinants means so far you have not decided to invest, but there are certain factors which compelling you to make investment, like why investment is necessary, why people are investing, because of inflation. So inflation is one of the important determinant of investment. If you will not invest, you will lose your purchasing power of the money. If you keep with you, you will lose your purchasing power, and that's why it came in your mind that investment is necessary. Then you want return. Obviously, every investment is subject to risk. You will decide risk factor. Then, according to your requirement, you will go for long-term investment or short-term investment. You would like to have liquidity in your investment or not, etc. These are some of the factors you have studied. Okay. Criteria of investment comes later on. Once you have decided, it means there was some confusion before making investment whether I should invest or not. Now you have decided, you are convinced that it is an hedge against inflation, for social security, for liquidity, for return, you have to invest. Now, when we talk about criteria, it means certain standards which you will follow for making investment. So today I have planned to discuss investment criteria, and I hope it is clear to all of you how it is different from determinant of investment. Maybe some of the points will be overlapping. See, now it comes to criteria. Actually, investment, it has already been decided that I have to make investment. Then criteria, maybe one of the important criteria will be what kind of evaluation method or technique will be used for investment. I'm not going to discuss in detail. It is assumed that all these methods you know. Whenever you invest, you keep in mind certain parameters, how to know the profitability of investment. One thing is clear, that people invest in order to maximize return. Now you have already decided, this is in your mind, that you have to invest money. Now next thing is you have to decide which method of investment should be used. Already you have studied in case of financial management, there are broadly two methods. One is called traditional or non-discounting methods for investment. Another one is time adjusted or modern techniques of investment. In this you have studied payback period method, average rate of return method, NPV, IRR, or profitability index method. These methods include the concept of time value, where your future earnings are discounted with the present value factor. So important criteria is what kind of technique I have to use, what method I have to apply for making investment. And these are the various techniques, the various methods normally used by firms, corporations, and individuals. So deciding the method of investment is one of the criteria for investment. I hope it is clear to all of you. You have to decide which method you have to use. It's okay? Is it clear to all of you?
Yes,
Yes, sir.
So no need to discuss. Already you have studied various methods. So you have to decide the investment criteria, like what are the evaluation techniques. Now, second one is investors compatibility. Okay. Already decided means now investment process you have to start. You have to start investment process, and you have already decided. You have to make investment. You will see record of investing in your industry. For example, you have been investing in IT sector. What is your record? Normally, investors invest money in different sectors, different industries. Like I invested in automobile industry, I invested in IT industry, I invested in banking industry. Which particular industry has given me more return? So on the basis of past record, I will decide the industry as well as the future prospect of the industry. Suppose presently real estate industry is not doing well in last 5 to 10 years, you can say, after global recession of USA in 2007 and 8. Since then, real estate industry is not doing well. So I will not invest in that. So on the basis of past record, you may decide where to invest. Investment criteria may vary on the basis of size. Some of the investors always invest in small companies, mid-sized companies, or you can say large or large cap companies. So size of the companies. Normally it happens, or investors believe mid-size, medium-sized companies provides more return. The reason being, in the past they have performed. These are existing business, and future is looking bright. They have growth prospects. As far as large cap companies are concerned, these are saturated companies. In the past, they have performed well, but there is no so much prospect of growth in such kind of companies. And small size companies normally have risk factor. These are newly established companies. Time period, what type of business they are doing, it also matters. Sometimes nowadays, like IT, especially if you see in uh, in this particular regime, like or current period of time, where impact of uh, impact of COVID-19 is severe, and most of the businesses are affected. But all those business which are based on IT, you can see IT sector is doing well. Most of the economic activities are done with the help of information technology. So what type of investment we have to make? So currently, I think information IT based companies should be selected. Time period, long time, medium time, etc. Personal and professional references. Suppose I have decided. So there was a connectivity problem. Anyhow, professional references. Sometimes, suppose I have decided to invest. I have proper knowledge of investment. I have time as well. I may go for analysis on my own basis. But if I'm busy, my area is not investment, my area is not finance, and I have surplus money I have to invest, then I may take help of some professional agencies. There are a number of professional agencies providing investment services, advisory services, consultancy services on fee base. And sometimes friend may also give reference. One of your friend or relative has invested in a particular sector, in a particular company, and he is well aware of that business of that particular company, and he thinks future prospect is bright, may suggest you. So investment may be based on professional services or based on personal references. Involvement, you may be active investor, you may be passive investor. Active passive means, suppose your full-time job is to make investment. Your full-time, you are very active. Always you watch market, always you listen newspaper, always you listen news, read newspapers, magazines, and you are in touch with what's happening around you, what's happening in the business environment, and accordingly you invest your fund. And passive means I don't have knowledge, I'm busy. Am I audible to all of you? There was some connectivity problem. Now it's okay.
Yes, sir, it's okay now.
There was connectivity issue, no? Your side also.
Yes, sir. Your voice was not audible.
Uh, Voice is not clear. Or okay, now fine.
Now it is fine, sir.
Okay. So is it clear, like active and passive investment? Some people have time, knowledge and experience of this field, so they may be very active. They are always listening news, reading newspapers, magazines. They are in touch with latest happenings around them, or in business environment, or in investment, in the field of investment. They are well aware of all the things, and accordingly they take decision. But some of the people are busy in other profession, in business, or doing some other economic activity. They are not basically from investment field. So obviously they don't have much knowledge, but they are also keen to earn money from their saving. So they would like to be passive investors and will invest in mutual funds, or will invest on the basis of uh, advice from some professional firms, or friends, or especially broking firms, mutual fund companies, or portfolio managers provide such kind of advisory services on fee basis or commission basis or profit sharing basis. So this may be one of the criteria for investment. See, when we invest, we have plenty of schemes of mutual funds. Actually, mutual fund is an umbrella where variety of schemes you can get. Or if you are not investing in mutual funds, you can go to a market where you will find variety of schemes, variety of investment avenues with their characteristics, with different characteristics. Like in case of mutual funds, you will find sector-wise schemes. If you are interested to invest only in IT sector, only in pharmaceutical sector, only in automobile sector, so you may invest according to sector. Small cap funds, like a small size companies you have to select. But if you invest in mutual funds and you opted a small cap fund, so your money will be invested into small companies or emerging corporations. Mid cap means medium sized companies, multi cap mix of a small, medium size and large cap, large and mid cap mix of both. Focus fund, for example, a particular sector is emerging one where the profitability or growth or turnover or sales or revenue is higher. So for time being, you may focus on, so mutual fund companies is focusing on those funds will invest your money into those companies or in those sectors. Dividend yield funds, your investment is based on regular income. If you want like regular income, you may have dividend yield funds. Like this, you will find plenty of, not only these, you will find them, there are many more schemes, open-ended and closed-ended schemes. So within mutual funds, your investment is in mutual fund, then you will find lots of schemes are there. Am I audible to everyone?
Yes, sir.
Okay. Some connectivity issue was there. Classification of companies. Actually, in case of mutual funds, we have discussed large cap fund, mid cap fund, small cap fund. But if you don't go for mutual fund companies to invest, you may go directly to share market where according to your choice, you may select large cap or blue chip companies. You may select newly established or emerging companies, that is small cap, or you may select mid-sized companies. So you have open option in the stock market. In case of mutual funds, already a group of large cap is selected. Your fund will be invested in that. Similarly, mid-cap group is selected by mutual fund companies. The small cap companies selected by mutual fund companies. But if you directly go in the stock market, you have option to select large cap like ONGC, NTPC, Reliance. These are large organizations. They have very good track record. They have very good history of past performance. And similarly, we have mid cap companies like DLF, Unitech, such kind of companies, Yes Bank, which recently you have seen. We have small companies, so many emerging companies. Name is not very popular, but if you see the financial statements of these companies, you may find these small cap companies. The small cap companies have tremendous potential, or in the past few years they have given huge return to investors. So this may be one of the criteria. Again, your investment criteria may depends upon what kind of companies you are investing in. You may invest in some multinational companies. Normally, multinational companies have very good track record of past performance. These, as I discussed, investment can be made into listed companies which are listed at different stock exchanges of the country. Like at Bombay Stock Exchange, approximately 6,000 companies are listed, and unlisted companies like there are a number of companies, millions of companies in the country which are registered under Companies Act 2013, but these are not listed at a stock exchange. So in case of unlisted company, you will find unlisted companies there, and investors buy shares of those unlisted company where trading facility is not there. Further, cannot be sold. There is no marketability, there is no liquidity to such kind of companies. But in case of investors who are willing to dispose of the investment, would like to discuss with the existing investors, and they may, and investor may sell shares to existing investors, or they may opt investors from outside after consultation with the existing investors. And if you have listed companies, investment has been done in the listed companies, then there is a secondary market, liquidity is there, marketability is there, anytime you may enter, anytime you may exit. So such kind of criteria is also for making investment decision. Apart from this, you will find sector wise. If you see from global context, foreign direct investment, like in India, you can see what are the various industries where a lot of investment has been done, computer hardware and software companies. It means these companies are doing well, and that's why foreign direct investors have shown interest. Then trading based companies, automobile industry, service sector, these are top FDI sector from investment point of view. Why investment criteria was different from foreign direct investors point of view? The reason being the performance policy of the country and future prospect of respective sectors, and that's why FDI came into these sectors. Apart from this, investment destination on the basis of tax haven index. Tax haven means tax is one of the criteria. What are the countries where maximum tax benefits are given? So according to data 2018-19, Singapore, Mauritius, Netherlands, US, Japan, UK, all these are the countries where most of the global investors showing interest. It means their criteria is to minimize tax liability. They don't want to pay tax. In some way or other way, these companies, these investments are helping these economies to grow, like Singapore, Mauritius, these countries offering a lot of tax benefit. They do not, they do not impose high rate of taxes to outside companies working in these countries. So this may be one of the criteria. Investment index, like if you see in India, you will find what are the states as far as investment environment is concerned, which particular state of the country is providing better investment environment. Investors feel happy to invest in these states. Like some of the states where investors would not like to invest, like Bihar, Chhattisgarh, Jharkhand. These are the states where investors are not showing any interest, like Northeast region, Jammu and Kashmir region, due to some disturbance. As far as investment is concerned, these are the states where the index is showing the most investment potential. These states have more investment potential. It means investors are showing more interest in these states. Maharashtra was having huge investment potential, but recently investment in Maharashtra has declined due to some reason in Maharashtra. Then we have global venture capital investment market. We have global venture capital investment market where investors may decide on the basis of nature of business. Some of the businesses are very emerging business. We call some of the businesses are emerging business. We call it like venture capital. We call it some emerging business based on new idea. So venture capitalists invest in those businesses which are having new idea and have tremendous potential to grow. Or investors may invest in blue chip companies, companies which are already existing one. It depends. It varies from one investor to another. Some are more aggressive, they want to take risk, and that's why they are going for newly established business where venture capital investment has been done, and they would like to invest also in those newly established firms than investing into existing one. Actually, existing business or large scale business will not give you so much of return, but emerging businesses or newly established business may have so much potential and may give you good return on your investment, but risk factor is very high. Sometimes investment decision is also based on the kind of team working in the company, board of directors, who is the CEO of the company. Sometimes the track record of the CEO, Chief Executive Officer of the company, plays very important role. So, for example, uh, you came to know Mr. X has very good track record wherever he goes. he has worked in 4 5 companies, and he has really changed the fate of those companies in positive manner. So professional team or CEO or board of directors, that also plays very important role in deciding investment decision. So such kind of things depends upon knowledge of investors. Normally investors do not know who is manager, who is CEO, and who is the board of directors, what is the track record, how professional they are. But keen investors, informed investors always are in touch with all kind of information, and they do invest on the basis of kind of team. Suppose a professional team is working or handling your investment will give you better return than unprofessional or those people who do not have much knowledge and experience. They are managing your investment, they may not give you good return. So this is also one of the criteria for making investment. The kind of professional team, board of directors, CEO is working in the and who is the like promoter of the company. Promoter also play very important role. Who is the promoter? So all these factors going to affect investment decision. And this is also very interesting criteria for making investment. Sometimes people invest and they have in the mind that I have not to invest in these areas or in these things, or if investment contains these things. So how to avoid bad investment? Already before making investment, people have in their mind, this investment I have not to commit. Such kind of investment I have not to commit. Like especially some of the Muslims, those who are very religious and they follow Sharia and Islamic laws, they will not invest, they will not buy shares of banking companies or any other company where in nature of income is speculative or related to gambling or anything which is unethical. Investment mistakes, like in the past, investors have committed funds somewhere and they prove to be wrong, and that's why they think that mistake they have not to repeat. Whatever investment they did in the past, it will not be repeated again. So this may be one of the criteria. Scam, for example, earlier you had investment in like a Yes Bank, and a scam happened in Yes Bank. In so many banks you will find mishappenings in so many banks. People took money and they never returned, and banks were in trouble. So such kind of funds, such kind of investment you will avoid. And there are many instances where uh, attraction, very attractive schemes are there. Like Speak Asia is one of the example where investors were offered high rate of return, and they got a lot of money from the investors, and later on they could not fulfill the promise and there was a big scam. Similarly, in 1997-98, CRB scam happened. Uh, CR Bansali, he was running a particular market through which he was raising money from general investors and promised to pay very high rate of return. And 1 or 2 or 3 years, high rate of returns were given to investors. And once thousands crores of investment the company got, and they escaped with the fund. So such kind of attractive schemes. And always remember, at this point of time, if anyone is offering you more than 10% assured return, definitely it will be a fraud. Later on, your investment will be in trouble. So such kind of things must be avoided from your investment. Apart from this, like religious issues are also, some people are ethical in terms of dealing, and that's why they would like to opt ethical fund. They would like to opt ethical fund. Ethically it should be good. Ethically it should be good. And some of the people have very strong perception in their mind that they have not to invest in government companies in India. These are loss making companies, their fund will be waste. They will they will they will not earn money. People want like to invest into those companies which are owned and run by the private sector. Normally private companies are known for their efficiency and good management. So this may be one of the criteria, that not to invest in not to invest in government companies. Some of the people have criteria not to invest in government securities. Some of the people have criteria invest only in equity. Some of the people have criteria invest only in debt securities. So all these are the criteria. These are not the only thing. There may be plenty of things which may be a standard for the investors before making commitment of fund. This is about criteria for making investment. So if you want to ask anything, most welcome. If you want to discuss anything,